let's train our focus on Zomato. Zomato is back in flavor, or is it? After a stellar set of numbers, investors binged on the counter in trade today, sending the stock up almost 20%. Investors were enthused about the food delivery aggregator reducing the losses by half. Its delivery business has broken even on the EBITDA level, and robust order volumes have also helped sales figures. We also saw 7.8% of Zomato shares being put on the block in trade today. So this block deal will go through tomorrow. This was done by an undisclosed seller, and the deal price ranges between 48 to 54 rupees per share. A total of 61 crore shares were put on the block, and Bank of America was the sole book runner to the deal. So a lot of updates on Zomato. Let me first begin by getting my colleague Anisha to break down what the action was today.
Talk about the stock of the day, and there is no denying the fact that the stock of the day today really has been Zomato, with that 20% up move that we saw on the counter. Of course, the numbers were good, but the street is now banking on the fact that the management commentary is also sounding a bit optimistic, and there is a bit of transparency which is there. Let's talk about the fact what street is liking. First up, there has been an EBITDA break-even in the food delivery business, and that has been taken positively. There's a double-digit sequential growth in the gross order value, and that is something that the street is watching out for as well. The contribution as a percentage of GOV has moved higher to 2.8% versus 1.7%, telling you that the profitability per order has actually increased. And profitability is also improving for some of their recent acquisitions and ventures. So Blinkit has done well. The food delivery business, of course, we talked about, and Hyperpure is also doing quite well for the company. And their management is also hosting a call for the analysts and investors at 5 p.m. on Tuesday. So that is something that really supported the sentiment for the stock, because lack of visibility has been a bit of sore point for the investors. Talking about what brokerages are making of it, and you have the Bank of America view for you on the screen. They have a buy rating with a target price of 82. They say that it's a stable quarter despite the headwinds, but they say that lock-in continues to be an overhang, or the expiry of the lock-in, it is a bit of an overhang on the counter. And they say that a Zomato Blinkit deal is on track, and focus on cost control is something that they like at the moment. Jefferies also maintains a buy with a target price of 100. They say that they like the fact that the food delivery business has broken even. It's heartening to see the double-digit Q-on-Q growth in the GOV, and the Blinkit acquisition is also mirroring the trend with a strong growth coupled with an eye on a reduction of losses, and that is something which has been supporting the sentiment. And we have seen positive commentary from the likes of UBS as well, with a buy call and target price of 95, I beg your pardon, and Goldman Sachs also maintains a target price of 100. So it's a thumbs up all around as well.
The next milestone there is to get the overall Zomato business to adjusted EBITDA break even. And we think we are close now. And in terms of timeline, I think internally we are aiming to get there by Q4 of this fiscal year. I think that's an internal goal that we have as a team. But we think that if we slip on that, I think it should not be later than Q2 FY24, which is September 2023 quarter, for getting to a break-even on adjusted EBITDA at the Zomato level. So I think that's a broad outlook and essentially internal plan that we're working on. On Blinkit, we had last, in a couple of quarters ago, given a guidance or rather a budget of $400 million investment in the next couple of years. I think the business has surpassed our expectations so far in terms of growth as well as losses reduction compared to where we were 6-7 months ago.
All right, Aditya Kundawar, partner and VP at Complete Circle Capital, joins us for more. Aditya, great to have you back on the show. Just your take on all of this excitement bubbling over Zomato, where it's a change in mood, a change in flavor. Do you see it as sustainable?
Sure. So thanks, Tamanna, for having me. Great to be back. It's always lovely to speak to you. Regarding Zomato, of course, the stock has had a stellar journey in the past week. It is almost up from 40 rupees to 55 rupees today. And like some of your colleagues just covered, there have been a lot of action going on around the stock, be it Blinkit, be it clarifying a lot of shareholder doubts. I believe that there were 2 to 3 major shareholder doubts that Zomato has clarified via its quarterly newsletter that was accompanied with the results, and of course the con call itself. So number one was, of course, the capital allocation that they were doing to a lot of startups that did not really make a lot of sense. Now, if we rewind back, say a couple of quarters, we saw Zomato acquiring a robotics company, acquiring a minority stake in a gym company. So these were really acquisitions that did not really fit into the whole ecosystem of delivery. Number two was, of course, Blinkit acquisition, which the street really had a concern about. A lot of analysts and a lot of market watchers said that Zomato is throwing good money after bad because let's be honest, hyperlocal delivery is a heavily contested sector with the likes of Tata's, Reliance, etc., competing for a piece of the pie. In fact, globally, if you look at this sector, a lot of players in the US have pivoted back to their original model of 2 to 3 day delivery, and they have closed down their hyperlocal grocery business. But having said all of this, there were some positive points from the development. GOV was up. If we extrapolate, given the stable AOV, we can find out that the number of orders have also increased. At the same time, the delivery costs have also increased. But we can see that operationally, Zomato is fulfilling more orders now. And that is the whole action on Zomato right now.
What do you make of this block deal news that has come in today? A big chunk of the share will be sold. And, this was an important week because that pre-IPO one-year lock-in also lifted. People came in and sold. Do you see, that's why I ask you, do you see that trend continuing? And what do you make of the block deal news that has come in earlier this evening?
Absolutely. I think the block deal news is obviously an overhang for the company because almost 8% of the company is going to be sold at a discount. And we should also note that, just last week when the one-year lock-in had opened, the stock almost fell 24%. So we have seen a lot of selling pressure from institutions and investors alike, and there had been a lot of negative sentiment around the stock. Of course, it's good that the management has come in and clarified a lot of these doubts, but honestly speaking, is this a sustainable trend or not will be solely determined by the numbers that the management puts forward, the kind of profitability timelines that they have set. If they meet it, then definitely the street is going to like it because let's be honest, a lot of these startups have been burning money for a lot of years now. And one of the biggest milestones in any startup is achieving, say, EBITDA break-even and then, of course, profitability. So the street will be watching it very closely. And if they miss their timelines, then it's going to be an adverse effect for sure.
All the corporate governance questions that arose, especially around the Blinkit deal, there were a lot of questions there. And then the communication that has been in the public domain that the company will now be called Eternal. There will be 4 CEOs, 4 different verticals. How do you think that is going to bode for the future of the company, and how should retail investors look at this?
So Tamanna, I think, like I said, again, Zomato has been taking a lot of actions, and this has been a clear-cut, effect of the falling stock price. We should remember that Zomato came up with an IPO price of 76K, went up to 170, and today we have it at 55. So it has been a crazy journey for the Zomato stock. Of course, the management has taken notice, and they are taking all the corrective measures to arrest that and reassure investors that they're going on the right path. And that's the reason why we are seeing them come out with all of these clarifications. In fact, they have communicated a lot in the past 2 to 3 weeks. Now, my advice to retail investors would be, of course, even when we spoke during the IPO and even today, track the fundamentals of the company. Food delivery is a very big space. A lot of new players are coming in still. Amazon is doing its pilot in Bangalore. We have new players such as DotPay, Thrive, who are offering food delivery ecosystem services to the players associated at a much lesser cost and much better and lenient terms. So one has to really watch this space. We have to really watch what's the average order value for Zomato, how many consumers are actually transacting with them. I must also disclose over here that the level of disclosures in the Zomato press release have gotten down a bit. We did not get data such as AOV or number of orders. We had to extrapolate it. So all of these things will be key trackable for Zomato going ahead. Like I said, it's a heavily contested space, and there's a lot of interest from a lot of biggies here. And then one can track the numbers quarterly. And since they have started the con call as well, which is going to happen every quarter, they can ask questions to the management and listen to the management themselves, and then can take a call as to whether they want to take a position or not in the company.
Thanks, Aditya, for joining us. Pleasure as always. and he's been tracking that stock very closely. But